Good morning. Is it a happy Friday? Not for some, for certain. But we haven't had something like this in years. We've always, well, because we've experienced these kind of things many years ago, we've always talked about markets moving down several days in a row in a fluid manner, collapsing. And why is that great? Well, maybe not so great in the moment, but it's going to set up, as it always does, one of the greatest opportunities, well, in the next couple of years, I'd say, you know. Now, the timing of all of that, of course, you don't want to get in front of the proverbial falling knife, moving train, call it whatever you want. But this kind of volatility will be good for day trades. And while it always, not always, but typically takes time to settle down and there'll be some kind of whippy actions that'll precede some type of trending advance. But some of these stocks that were just, had iron vests on, like whether it was Nvidia and Microsoft and the Fangs and all of that, that are being taken out to the woodshed, are going to create huge opportunities for investors. And that hasn't been the case for a while. So that's what makes it great. And so now, how low does it go? Well, we just look to the left and see, you know, assume it's going to get there. That's a starting point. Doesn't mean it's going to get there. So that's kind of a heads up because there's plenty of times that it's like, it's going to get there. And I thought, oh, it'll get there. And the bottoming action starts coming ahead of that. And it's because institutions are anticipating the same spot. They don't want to miss out. They have to average in, to put all that money to work. So you have to pay attention to bar by bar analysis and, you know, gap downs that are bought, big gap downs that are bought, shakeout patterns, all the things that'll eventually develop. And yeah, that's it'll unfold. Will it unfold today? That's unlikely. You know, unless the only thing could turn things around, and I'm thinking as I'm talking, because I experienced that in many years ago. Uh, you know, the Fed will cut interest rates. There's this dire moment. The markets are crashing. We have to save it. Well, probably too early. The timing of that usually comes at a very technical, opportune moment. So they know what's to the left. Right? Believe me, at the Fed, they look to the left. And so what we see this morning is what information that we look at that had gave us a heads up in 2022, something bad's going to happen as interest rates started to advance from this zero level. And so now they're declining, and it doesn't mean they're going back down to zero. Let's hope not, because something very bad would be happening. Anyway, it's been basing here all year, and now it's breaking. So that's the market saying the Fed is going to cut interest rates. I don't know when, but this is super reliable information. They're going to cut interest rates because now fear of recession and you know Trump's doing what he's doing, Republicans doing what they're doing, but they want to put a floor under this, midterm elections, political bullshit, rather than doing the right thing. In any event, they're going to cut interest rates, and we'll see when and how much. But we know by adding liquidity, what happens? Buyers are going to show up. And that's what we want. At some point, when prices reach a support area or get close to a support area, liquidity starts getting injected into the system, and we start looking for the price patterns that support a bottoming process. And you got to be careful with that because while we talk about the markets, there's going to be stocks that are going to bottom out before the markets. And there are going to be stocks that we're going to see the markets bottom and they're going to still get decimated. And so it's not so easy just to say, oh, the markets are going to reach some point and they're going to bottom out and, XYZ will be a buying opportunity. Well, those are general statements and no, they're true. But the timing, the money management are going to be very selective, not to, go all in. And some things like, whether it's NVIDIA, which we know they're going to buy at some point, um, you know, but there's no reason to just go all in anyway. So on. Internals, not there yet. Right? Breath is not there yet. Why isn't it there yet after yesterday being such a nasty day? Right? Now, put call ratio down at what we were looking for, historical high levels. I have this inverted. These can go lower. This is equity. This is total. I've seen this down at 1.34 on the moving average. This here, you can see it's not quite there yet. Give us guidelines. But breadth was down here at, like a minus 1700, and it was down near minus 2000 during the day. Well, you have to realize how this is constructed. Right? And the way it's constructed is taking this data, this day-to-day data, and plotting a 19 and a 39 exponential period moving average. And all this line is, and it's really simple, is just the distance between those moving averages. So moving averages constructed as they are, if you look back 19 days, I don't know exactly where I'm pointing, but if you look back 19 days and 39 days, that data is going to be dropped off and the current data is going to be averaged in. And them being exponential period moving averages, more weight is going to be given to the current data. And assuming a negative number today at the close, we'll see, it's going to be negative at the open, this is going to plummet. And these things are going to align. And we're going to get a short-term buying opportunity next week. And I don't know what's going to happen today, but I'm just going to say next week because the fear of what's happening right now is unlikely to dissipate in a moment. All right. Interest rates are collapsing. And I think I heard Trump say he wanted lower interest rates. Well, you got it. Maybe you're not getting it the way you wanted it, but you got it. And here it is. Swallow that. And recession, indication of recession, 100%. Eventually, it'll be a great situation. Money gets cheaper, people borrow money, the whole cycle starts. And the next question is, look, way back when, in these pre-market reviews, it was mentioned the things that were beginning to occur were going to create a recession. And I said, you'll hear it on the news, and here it is. And now the question is, as certain as that looks, can they start cutting interest rates so fast that they can head that off? I don't think so because things always have a lag and people are going to be scared to death now as to what's going on and they're going to withdraw. And the good thing about that is that all of those high prices for eggs and whatever, people are not going to buy them. And then the supply is going to build up on the shelves or whatever it is. And people are going to cut prices. And that's the cycle. So, interest rates way down here. It's where they were. That's October, September. They started to rise. We'll see if they get down there. The 5-year collapsing as well. Right? Supposed to do that. Transports collapsed yesterday, crushed. This doesn't give me pre-market data, but down here is probably where they're going to be headed today. So this is the monthly chart. Scrolling it over back down there to 2023. So there's a big low point for those. Uh, Gold coming back in here. Mm, Um, so that looks like it's going to continue to correct. So the news is out. This was bought in anticipation. Now it's correcting. Buyers will probably show up again down here. Silver is getting decimated today. This is interesting. I don't know why, other than, it was lagging gold and whatever reason people are selling, but this is getting crushed. So having longs like that and a drop like that in a short amount of time, wow. Crude oil, another piece of information is recession coming. Interest rates are going down. No need for oil because production is going to slow down. And, you know, breaking below the support, which we talked about, months ago, and it held initially, and now that's collapsing. Interest rates are collapsing, you know, and so now people are going to talk about the worst as they always do. History will repeat itself. It'll probably get uglier before it gets better, and people will, go to the mattresses, so to speak. And the ones that do nothing will not participate when the turn comes. Right. So with every downturn of business or the markets, the thing is to survive for the turn. And because this is going to flush out, you know, not necessarily weak hands, intelligently, people are going to sell, right? Because you just don't know what's going to happen. So, but those that didn't adhere to their stops, they're going to be gone. The margin calls are coming, right? Soon, if not today, we'll hear about hedge funds being closed, um, and all of that stuff that happens with this type of turn. So it's not done. So we'll just take a little look around here because it's going to be the same everywhere. And we've got, well, I got to scroll this back, put it on the monthly chart. Where's this? All right. So these things appear like they got to come down a bit more, but there'll be bounces along the way before they reach their destination. You see small caps there. And as I said, they don't have to come all the way down to support down here, which is, you would think, okay, they need to come down there. And now it's around 182. It's far from there. But if the Qs reach some significant support of the S&Ps and they start to buy, people will buy some small caps, and, interest rates will stabilize and so on and so forth. Semiconductors collapsing. They have a void. And I said things are coming in a lot. And so we look at that minor support. Here's the void, which means these things have room to drop. So again, factory work. Look to the left. There's the levels. We'll see if it gets there. Right. 182. Whole number didn't hold. 200. Q's was 450-ish, and it's 4. Went down to 430, and 430. Assume that went down there. Yeah. So this is reaching its destination area, initial destination area. To see if that holds up down there. And look, little bounce. I mean, I'll say it again, because if you're still using Fibonacci levels and trend lines and all of that hocus pocus, rather than removing them, just looking to the left. And what do they say? You can lead the horse to water, but you can't make him drink. Anyway, so you got, no matter where you look, things are getting smashed here. That's a good thing for the intermediate term. Spiders, 515. 515. Why don't I have this on here? Hold on 1 second, please. It's visible. It's visible. All right. So that's a 514. You can see that tail bar. It's not a pivot, but when you got a tail bar like that, there's going to be pivots. And then we've got the whole number down there at 500, which many will look at, and it'll be so widely focused on that maybe it just won't get there. So, we'll see. But there is support in alignment with the whole number. So, look at the weekly chart. Things out here down near the August low, which is, hold on a second. Yeah. So that's what we talked about yesterday with the big gap down that occurred. And I talked about how different it was. Things were going down at that time, and this was more like getting started. And so today is continued. And so there's the August low down there where some buyers begin to step up, not very enthusiastically, I will say. And so August low, SPX, and probably going to want to give this a little time. So average true range is opened up to about 115. And so prices being at the near the August low, you really got to drag that down a bit lower. So this is a anyway, let me just look at that rather than fiddle around with these lines, but you get the idea. Dan can update here. So look, I can't even get to the numbers because the move is so big. And this is already at 8%. I increased from yesterday. This is big. I mean, this is not your typical, day-to-day stuff, which I'm stating the obvious, but look, below 5,000, below 5,000. I don't even think I have to put the number in, but and it sounds like, that's not possible, Greg? Well, of course it's possible. Is it probable? Even if it gets close to there, this number is going to increase. And there's going to be buyers down there. And whatever. Wow. Could ask. I mean, it's kind of ridiculous even going down to 49, whatever. Let's go 49.50. I'm just making up a number here because it just seems so ridiculous. But this is what we want to see. If you remember earlier in the week, I said, hey, the market's down and they're not pumping up the put options. I was like, well, and it was a bullish day. But the other side, which I said yesterday, seems in retrospect, it was kind of complacent to be doing that. 5,500, that's a good number. So you can take that over, Dan, while I just do this. You're going to cover. And pick your spot, but those extremes won't get touched today. All yours, Dan.
Good morning. Yeah, my bias is 30-minute high, spiders, put spread, call spread on VXX. It's just my bias. The bigger the gap, the better. What would make it easier is gap down and sell off into 10 or 1030 reversal. Get a 15-minute reversal bar, but we're actually stabilizing here pre-market. And we talked a lot in the room yesterday about here, let me show you VXX. These are volatility ETF. Now we had a beautiful call spread over here because see, it's a CLIMO topping tail gap down, which corresponded with this turn right here. So this picture is totally different than this picture. Totally, this is igniting under three bullish green bars. You know, I was saying yesterday, measured move. What did I say, Alex? 520? And I don't know, some of you might have been shaking your head saying, you know, Dan hit the sauce bottle. Guess what? When I woke up this morning, it was at 520. In fact, it was 519 and change. I emailed my brother saying, you know, who my brother, who's a marvelous contrarian, he told me to go all in on the market for my dad on this new high right there. Dead friggin' high he wanted to get in. And so I sent him an email saying, we're getting close. We're opening up at 520. But this is nasty gap, which is why, and this is an igniting bar. Gap the same. Gap number 3, bearish bars. Closing with a range expansion, closing breakout. I'm not shorting this thing. And now, you know, I texted Alex when we made this little small head and shoulders top. Pre-market, I said, hey, you know, this thing looks like it's topping out here pre-market. But you know, we don't have to nail the exact bar entry, but that's my bias for today. I mean, I have no friggin' idea if today will be the low of this move. I wish Greg said the internals were more cooked, and then I'd feel better about it. But we'll just take it as we see it. But that's my bias on that. Yesterday we were in defense mode on our any bullish positions. We're flat in the weekly options trader, which is good. It feels good. Our only loss on the entire week, this Abgo, we did a put spread here. I wish, you know, whatever, we had an open gain, but we killed that at yesterday. But we still netted the day positive with the gains on our other credit spreads. So, you know, the weekly options traders are doing fine in this mess. The advisory letter, we put on 4 new shorts yesterday, 0 longs, AAP. And, you know, I tell people that it's a very simple recipe, particularly when the markets are down a lot in that direction. I said, I want, you know, obviously a pattern. I mean, that goes without saying. But I want it for shorts, I want it close to resistance and not far from the 20. There you have it, AAP. So that's a breakdown at the 20, sell set up weekly. We did Suave. Similar, right? Well, the weekly is a breakdown, not a sell setup, but capping under a green bar, close to resistance in the 20. We did Reddit, gap down from a descending triangle. And so I sent an alert pre-market to cover a third, move stop, break even. Just because it's down so much, and if the market turns, I'm surely not turning that into a loser. And then defend we gave similar to the other, gap under green bar, breakdown. So that's the recipe I look for, both identical on the long side when the markets are up a lot. I had an alarm on ODP go off, similar. See? Y'all get to hang of this. I mean, these were new short setups. This one I did not trigger. I don't know why. I don't know why. But let's keep an eye on that today. Oh man, I see a gap in the 1250. So the gap's messing us up. On my other computer, I see some prints at 1250. All right, well, I don't know why I didn't get us into that, but all right. Elf. Yeah. I mean, yesterday's a big range, but yeah, Thomas, that meets my recipe of just like the other ones, without a doubt. And I said in the video the nightly video. On the, what's today, Friday? On Wednesday, I said, and this, this, we didn't give any trades that day pending the Trump news conference on tariffs. And we said, look, we open flat, I have a full bullish bias over the high. If this, we have a bearish gap, then we're going to be looking for continuation patterns lower. We got the second option. So that's that. A couple of earnings here. Opening flat, no pattern, guess, retailer. Man, there were so many retailers yesterday that got friggin' killed. I mean, look at Nike, BBY. Look at that carnage. RH had earnings, but look at that. That brought down Wayfair, and there's just damage everywhere. All right. These are earning stocks, 70-cent stock, no interest. No pattern, trades like garbage. SLP, down too much. This actually would be an interesting chart if it negates the gap down and comes slamming right back as a bear gap that bullies pattern. I was watching a number of gold stocks yesterday were strong and bear gap that bullies, but now it's down. And see, I didn't get us into a single one, but I gave a watch list of like 7 of them. We went through all the gold stocks, we went through all the retail stocks. Banks got killed yesterday, oil got killed, and oil's gapping down again today. I see metals and mining. We'll be watching the FANGs as always, possible zero DTEs. Some consumer staples held up well. So in the gold, this WPM, let's see if this opened flat. I got my alarm up here already. That would have been a beautiful continuation, but now the gap down is, putting a monkey wrench in all those ideas. Tobacco was strong. Papa Mike closing breakout. I got that on my list, maybe for 1, 2, 3. CSGS was a short idea from yesterday. The short was going to be under yesterday's low, but now the gap's messing it up. Sam, that was on your list. El Lima, we're in trail mode on El Lima. We only have a third and we have beautiful gains. But the last stop was under this WRB, which is what, Tuesday's low. So let's move stop 5-minute low on that. So it's still a nice profit, but that's giving away some of our gains there on the gap down. Move stop 5-minute low. Well, before I even look, I'm telling you, new shorts today are not going to be easy. I'll look at them, of course, but I have a bias for day trade longs and put spreads with this big old gap. Or it's down too much. That's not my setup, right? Thomas, it doesn't meet my test of a pattern close to resistance, close to the 20. So it's not my wheelhouse. It's not my pitch. ODP, I'd rather short 5-10-minute low if the market starts selling off. Let's see if this, I look at pre-market, data, of course. Look at the spiders here, still going sideways after this morning bounce. So let's see what it does here, but I would want a breakdown here and that's the pre-market data in order to short things, but ODP I like. That one still looks good as a new trade to me. Uh, our AAP, particularly if it's a 1, 2, 3. All right, look at our AAP. Now I'm going to move stuff 37.52 just to actually 37.22. We got a nice gain in that. And I found these 4 trades. Well, one Sam gave me Suave. I got the other ones from scanning yesterday. Something I taught Greg how to do. So I got us out of the third pre-market, which capped our gains a little bit. Defend new low. Nice. That was one of our 4.
These ranges are big. Better be aware of that and adjust your money management. I'm sure brokerage firms are going to raise margin. That's typically what they do.
Oh, my bad. Wait, 30. What? 36.77. I messed something up here. Let's move stop days high. 36.02 AAP. Let me give another. Hey, I also heard from Leisman, I think, or somebody who was saying that this huge change in interest rates is causing huge losses on a lot of people.
Of course.
Well, I'm saying the interest rate traders.
Carry trades.
Right, right, right. All right. Where did this girl Carrie come from? Why'd they name it after her? Yeah, Greg, over lunch today, I'm gonna call trading computers. Because my computer's slow.
Better to email them, make an appointment.
Oh, really? Really? I've never done that. Okay.
I mean, you can call and leave a message. You'll probably have to leave a message and then they'll, email you back. But if you email them and just tell them that, you're want a tune up, so to speak, they'll set up a time with you.
Okay, yeah, I'll do that. Thanks. All right, defense. Man, I don't even see these prints. It shows 3,700 volume.
And don't forget to tell them to update 10 to 11.
What does that mean?
You're probably still on Windows 10.
Oh, okay. I didn't. Okay. Gotcha.
So it don't do it during market hours because the conversion take a little while probably.
Yeah, definitely. Definitely. Okay, good. Yeah, I was thinking just the tune-up part over lunch, but yeah.
Depends on how the age, Brett. I've got an old laptop I won't be able to, but Dan and I we bought around the same time, and they updated mine. There was some kind of workaround because Windows wants you to buy, right? But there was some workaround that they knew when they updated mine into to 11, so they should be able to do Dan's.
I don't know what's going on with this volume here on TFIN, but the spread is 40 by 41.26. That's why I said bid 40.05. Still high bid. Last print 40.63. I don't know what's going on there. Incredibly slow.
The financials are a big story. Hard issuers are a big story today.
I read it. We're out of third. I moved stop break even. That's fine. And I noticed Mister was green this morning, so that gave it up. Nothing to do there. So AD line broke down from the base yesterday. It's now negative 2280. Our VXX. Now, if this, let me set an alarm here. This could be a 0 DTE, but you know my rule. I don't do them until I get a turn in the spider. I do not have such a thing yet. But let's see the 70. Wow, Greg, the 75s for today are $1.50. So ideally, we, crash the new lows and the spiders, and then we can then do the 80s.